want to welcome you all to our webinar workshop this beautiful Tuesday morning. We appreciate you spending just a small part of your day with us. My name is Brian Griffin, a marketing assistant here at Messer Financial Group. And many of you are already familiar with Messer Financial, but in case you do not know, we are an FMO located right here in beautiful Mint Hill, North Carolina. We started with just 2 agents. We are now serving over 20,000 agents across 40 states, and we are still growing. So when I first got licensed in 2010, there were just a few options when it came to selling final expense at a reasonable rate. Monumental Life, a Transamerica company, they were my go-to when it came to final expense. Super easy product to learn, easy application, and client-friendly underwriting. So you couldn't ask for anything more as a new agent out in the field. That was 10 years ago. And Transamerica's final expense product is still, after all this time, a go-to product. But Transamerica isn't just go-to for final expense. Their product line has grown to cover every single person in every household, every family that you sit with. So today, we're going to be speaking with Dwayne Flynn and Neil Williams from Transamerica. Now, Dwayne has over 20 years experience in the insurance industry, having worked for several carriers, general agencies, and has worked with financial advisors. And Neil has 4 years experience in life insurance, working as a primary point person for agencies, and he carries extensive life insurance product knowledge that I'm sure he's going to be sharing with us today. So before we do get started, I want to go over the housekeeping rules. We're going to hold all questions until the end of the presentation. If you have a question, type it in the box on the right-hand side of your screen, and we'll address your question at the end of the presentation. So now, without any further delay, Mr. Dwayne Flynn and Mr. Neil Williams.
Excellent. Hey, thank you, Brian. Thank you very much, everyone. Good morning. I appreciate Neil and I appreciate the opportunity to spend some time with you together. We are going to go over like Brian had said, we're going to go over a couple of our different products. Main focus will be on final expense, also on our term product, Transetter LB with living benefits, and then also some updates as far as where we are with COVID-19 and our non-med enhancements. So Neil and I will do our best to cover all this for you, and then like Brian said at the end, questions, please do ask questions. But I do we'll just jump right in if you guys don't mind. So our final expense, really good time for us to be getting in front of you or to be presenting this for you. So this product has really morphed over the last several months. And so where Brian was talking about when this product was with Monumental, when we bought out Monumental over 10 plus years ago, product has really morphed as to what it is today. And most recently, mid-May, we came out with a 2.0 version. So we launched an electronic application, had it out in the market for a little bit, and then made some major enhancements that we just launched, like I said, in the middle of mid-May. I think it was May 16th, Neil. Does that sound right?
Yep, that's right. Yep.
So with that, when we did that, so I'm going to cover a little bit about the e-app because it was huge. It's something that the market has been asking from us for a long time. So I'm going to cover a little bit on e-app. Obviously, I'll dive into the specifics on the product, but just some quick notes as far as what we've seen in the month that this new e-app has been out. So average time to complete a final expense application, e-application, for the industry is anywhere between 15 to 18 months. We have been experiencing anywhere between 12 to 15 minutes. So just to give you an idea, this is pretty, I was going to say monumental, but it is pretty monumental for us when we launched this e-application, and the fact that the functionality of that's been very well received. So some quick points. So it is on iGo. So it's an iGo e-application. This is with this launch of this e-application launched our Express Protect underwriting. So this is where we are gathering as much information as we can. Once the application gets entered in, we're going to script checks, checking MIB, MVRs, things like that. So we're trying to gather as much as information as we can and really speed up the process. So by the time this gets to an underwriter, if it needs to be looked at by an underwriter, we can greatly speed up that underwriting decision. The ultimate goal of this product, we're not, and I'll just full disclosure right now, we're not there. We do want to make sure the functionality of this is the functionality of the EAP is there before we actually launch into what will be a phase 2. But what you will actually see is with this Express Protect underwriting, where you'll have could possibly have an immediate decision. So right there, where you are submitting an application, you're getting a decision and a policy on the spot. And again, we're not there right now, but our underwriting times and processing times have sped up greatly just because of the functionality of this EAP and what it has. Neil, is there anything you wanted to add on that?
Yeah, I was just going to say, even though we're not to instant decisions quite yet into that phase 2, you still have the potential to get a decision within minutes. It'll come in the form of an email. You'll get really one of 4 emails. So one would be approved as applied for, approved other than applied for, referred to an underwriter, or declined. So there's still the potential to get that within minutes. Obviously, we're not quite at the instant decision making where we want to be. And then really, that should be the case as long as you're not submitting the application late at night. That'll probably delay it, so you'll see it the next business day. But like Dwayne said, this new system has really allowed us to speed up our process.
So again, if you're looking at the screen here, so there's no examiner labs. We will, and Neil will in a little bit. We'll cover some of our niches after we dive down into the products itself. But it's helped, obviously, like I was saying, reduced our cycle times and the case requirements. So the goal here is really to number one, we really don't want to be doing phone interviews. We really don't want to be going after any kind of records in that with this product. And because of this Express Protect underwriting, that's allowed us to do that. The other thing is you see on the screen is our accuracy guided application, and I'll cover this a little bit in the next screen or so. So as you're answering the question, it's called a cascade type of application. So as you're answering questions, it's guiding you as to what the rate class can be and what product is best suited for your client based on how those answers are. Let's see. So here's what we're talking. So as you start answering these questions, the app will actually design you. So depending on, like it says there, medical history part 1. So depending on how these questions are answered, the yes or no's, it's going to guide you. It's going to guide you to your rate, the best rate, your best rate class and or product. And when we talk about product, we have this product is actually 3 products within one. Hopefully not to confuse you, we will cover all 3, but just on the start of, we have our immediate solutions, which is where you're getting coverage, death benefit coverage starts day 1 right there at issue. Then we have to our easy solution, which is someone who has some major impairments, but we're still able to get them coverage. That's our graded product. So the nice thing how this application sets up, and with the speed of it and the accuracy of it is it actually guides you so that as you're sitting with your client, as you start answering the questions yes and no throughout these different parts, you'll know exactly, it'll guide you to the best product and fit for your client. So, okay, so some of the things I'm going to cover here today, but there's going to be a caveat, and the caveat's going to be is COVID-19, okay? And we will later in the presentation, we'll cover what we've done for COVID-19 and our enhancements that we've made, but we've also made some limitations. So some of the issue ages here that are listed are not going to be in effect as of today because of COVID-19. So hopefully we'll clarify all that for you. But like I was saying, there are 3 different products that we have here. So the immediate solutions is, like I had said earlier, that is where it is day one coverage for your death benefit. So if God forbid client were to pass away, they have right there day one, they have the full death benefit available to them. Some of the advantages for us that you'll see. In non-COVID times, our issue ages go to age 85, age 80 in Florida. I just want to point that out, but we would normally go to age 85. Today, as we sit, because of COVID-19, our reinsurers are not allowing us to write any policies when any of our products above age 75. So 76 and above, we are not able to write coverage. So, but non-COVID times, we would be able to go to age 85, which is an advantage for us. You can also see the max issue amounts. So up to age 55, you can go up to $50,000 in coverage, where a lot of our competitors maybe only go to $25,000. We actually go $25,000 for your 76 to 85 if we were able to write that at that time. Couple quick, it does have a terminal illness accelerated rider on it, as well as a nursing home rider. Now, those are included in the plan itself and the product itself. So I just point that out. Sometimes agents will say to me, well, it's really a small product, so how much is that going to help them if they enter into a nursing home? It's included in the product, so it's not an additional cost. It's just something nice to have that we put in there if in fact your client were to want to take advantage of that. So that's our immediate solutions. Minimum issue amounts $1,000, as you can see there. There is an accidental death benefit rider, children or grandchildren's benefit rider. Product number 2 is what we call, it's our 10-pay solution. So identical product to the immediate solutions. Difference here is it's paid up in 10 years. Immediate solutions product, I'm sorry, I should point out it's paid level premiums, to age 100. Sorry about that. Level premiums to age 121, where the 10 pay is level premiums for 10 years. A lot of times, and I think Neil, you'll concur with this, where we see the 10 pay is where you'll have a grandparent buying coverage for a grandchild, and they want it paid up as quick as possible. So the 10 pay solution, similar to the immediate solutions as far as issue age, issue amounts. And again, this is immediate coverage as soon as it's issued. And then the last product under our final expense solutions is called our easy solution. So this is our graded product. So this is, as we were answering those questions, there's a lot of yeses coming up, and this is typically for someone who has some pretty major impairments. Okay, so the difference here is you can see the max issue amount is 25,000. Max issue age non-COVID is age 80. So you can see how that's where our market is shrinking as far as by 5 years on the issue age. But max issue amount's 25,000. It's still level premiums to age 121. Difference is the death benefit. So the death benefit during the first 2 years, if your client were to pass away, they would get as a death benefit 110% of the premiums paid up to that point. After 24 months or after the second year, it is then the full death benefit amount that's available to them if and when they pass away. Oh, sorry. Hey, Neil.
Yeah, I was going to add just a couple notes here, Dwayne.
And then real quick, Neil, did you want to cover some niches as well, or no? I can cover them.
No, you read my mind.
All right.
So I was going to say, for what we're really known for with final expense is our underwriting niches. It does really give us an advantage. So one we're really known for is diabetes. So we really want your business if you have diabetic clients. So really, if they're on insulin, they're insulin dependent, we can offer your clients a standard risk class. And where we really win is if they're just taking a pill, like let's say metformin, for example, to control their diabetes, we can actually offer a preferred risk class. So we definitely want those clients. And then we're also known for COPD. We can offer a standard risk class for that impairment. And then we don't ask about medication for high blood pressure, hypertension, anything like that. So that really allows us to offer your clients a good rating as well. Anything you'd like to add as far as underwriting niches, Dwayne? Did I cover most of them there?
You did, and you know what? And so one thing that's not on here that we probably need to add, Neil, is there are for this for our immediate and our 10 pay. I'll just go back real quick. So there's actually I guess 3 different rate classes. So there is a preferred, there's a standard, and then there's a smoker. So when so like Neil was saying, depending on you could actually have a diabetic, depending on what kind of medications they are and control they are, they actually can get a preferred rate class. But again, it's that cascade application really walks you through and will guide you as far as what that rate class and what and product that is going to be for you. But I did forget to add that in, that there are the 3 different rate classes that are available. All right. Okay, so our term products. So we have 2 different term products. One is called our Trendsetter Super. The other is our Trendsetter LB. So I just real quick on our Trendsetter Super product. The reason I added that in here was because back in November, we repriced this product. So our Trendsetter Super term product it's your plain vanilla type of product. It's a price driven sale usually. We are with the reprice that we did in November. We really positioned ourselves, very competitively. I think almost 75% of the time we are in the top. 75% of the time we're either number 1 or within the top 3 as far as pricing on this. And then more recently, and why I added this was more recently some of the other carriers during COVID-19 actually increased their term rates over the last couple of weeks here. So we actually did a relook into that, and we are actually we're very happy where we are with our pricing on this and where we are as far as in the marketplace. So we did not do any adjustments. We kept our lower rates down and in there on our Trendsetter Super product. Some things to point out with us: we are current age. So when you run quotes, it's always to our advantage when someone enters in their actual the person's date of birth, because with certain carriers, as we know, you guys may or may not know, but certain carriers, if you're within 6 months of a birthday, they will actually make you a year older. Where us, you are your age until the day before your birthday. So that's an advantage for us. On the Trendsetter Super, and also with the LB, but we do have a 10, a 15, a 20, a 25, and a 30-year term. The uniqueness with the 25-year term, if you write a face amount, Neil, is it greater than 100,000 or 250 is where a 65-year-old can actually get a 25-year term?
It's greater than 100,000 on the Trendsetter Super product.
There you go. So that's the uniqueness of the 25-year term is based off. So if you write a face amount of 100,000 or more, you can actually get a 25-year term for a 65-year-old person. And let's see, this is covering some of the pricing highlights that I was talking about. So again, top 74% of the time we're in the top 3. That's actually, that number is probably more like 80-some% of the time now, because of some of our competitors just doing some repricing and increasing their term pricings on this. Here's where we're talking about minimum face amount on that term product is 25,000 up to 10 million. A true non-med. Now this is for the product, but then at the end we will also talk about our non-med enhancements that we've done for COVID-19. So on this product, a true non-med is 99,000 or less face amount. No blood, no urine. We are, the goal there is to do the minimum amount to get this product issued. If you do this, if anything under 100,000, best rate class you can get is a standard. And again, we'll cover this a little bit different or a little bit later as far as what our non-meds are and our enhancement to that. The additional benefits or riders that are out there. These are your typical, waiver rider, waiver premium, children's insurance rider. Those are your typical riders that are available on your term products. And this is where I was talking about the bands and then the age for each one. So I'm not expecting anyone to really remember this, but I just wanted to point out again, you can see the 25-year term product, and if the issue age is for over 100,000, you can write a 65-year-old on a 25-year term. You can actually write a 58-year-old a 30-year term. So I think that's an advantage when you're looking at that. The key is the trigger again is the face amount. Trendsetter LB. All right. So what we decided to do is we came out with two different term products, like I had started. So Trendsetter Super, again, is our plain vanilla type of term product. It's very price sensitive. Trendsetter LB, the LB stands for living benefits. So we were one of the, I think it was 6, 7, 8 years ago, is when Transamerica was one of the first companies to come out with these living benefits and put them on a term product. So we've decided we have two different products because there is some pricing, difference in pricing, difference in some of the ways of the product and how it worked, and we wanted to be able to customize between the two. So the main difference between, or the main advantage, I guess, with the term product with our Trendsetter LB is the fact that you do have, if you look at the pie chart here, your death benefit in red, that's a typical life insurance product. And then in the gray, your terminal illness benefit. So that's someone is determined to be terminally ill. Terminally ill is less than 12 months. With us, you can accelerate 100% of your death benefit. So those two, that's typically every insurance product, life insurance product out there. With the Trendsetter LB, what it's added to a term product is the critical illness and the chronic illness. So now this is where you're sitting with a client, and we'll get into this a little bit later, but this is where with critical illness we're talking about heart attack, stroke, cancer, major organ transplant. So this is where typically you have an individual who says, well, that's great. If I pass away, it's going to, my spouse, my children, but what's in it for me? And this is with these two riders, the critical and chronic, that are built into this product. This is where if they need to access their death benefit for themselves because of certain conditions, they can do that. Couple quick things I want to point out. Coverage on this, minimum issue amount is $25,000. Maximum face amount is $2 million. And the reason it's $2 million versus, if you guys remember, it was $10 million on our Super. $2 million because the maximum living benefit payout or claim that you can have is $1.5 million. Okay, non-med on this product, a true non-med on this product is up to $249,999. So anything up to $249,999, up to age 60, there is no pyramid at all. And you can see also the riders available, same riders that were available on our Trendsetter Super product. Neil, is there anything you wanted to add?
I was going to add, and you might be covering this pretty soon here with wealth and health, but for living benefits, it's all about how you present it to your client, how you sell it to your clients, and really helping them understand the importance of the living benefits riders. And in a moment, Dwayne's going to talk about wealth and health, which is just the way we think about things differently here at Transamerica. But for me, I just wanted to share real briefly just how these benefits could have helped my family. So back at the end of 2019, my great aunt actually had a stroke. Unfortunately, she's still with us, thank God. But she had a stroke, and my parents basically wound up paying for everything. So paying for, she's in a nursing home right now, paying for the medical expenses of the stroke, helping to sell her house, and she also has a son with some mental disabilities who's about 40 years old. So a lot to be thrown on somebody's plate right away. And fortunately, my parents are in a position where they've worked hard, and they're going to be okay financially. But I mean, it's definitely changed their lives. Not just emotionally, but also financially. It's changed their lives to the point where, and it's going to delay when my parents were expecting to retire, and certainly the lifestyle that they intend to live for the future. So my point being is everyone has a story with living benefits and how it can help, how it could have helped my parents' lives if my great aunt had one of these policies and we were able to accelerate the death benefit because of that stroke. It would have changed the way my parents probably would have handled that situation and how they're going to move forward here. So everyone has a story, and Dwayne's going to talk in a minute about wealth and health and how you can present this product to your clients.
Thanks, Neil. So here's a little bit, a little breakdown as far as how this works and what's actually covered. So on critical illness, and again, one thing that is not in here is when you're talking about the additional cost between what's the cost between your Trendsetter, difference in cost between your Trendsetter Super and your Trendsetter LB. For up to about age 35, give or take, it's really $2 to $3 more a month is what we're talking about. You start getting into 40 to say 50, 55, depending on the face amount and rate class, and that it could be $4 to $5, $6 more a month is what we're what we're talking about. So in the big scheme of things, it's really not that much more of a cost. When you run if you go to a quote engine, you're running quotes. This product probably won't fall in the top 10 because it's a little bit more expensive, and it ranks it all out by cost. So you really got to scroll down and actually find. You'll see our Trendsetter Super will be at the top, but then you got to scroll down to probably maybe page 2 to and look to find the Trendsetter LB. So I know when Neil and I, when we're working with agents, we always sending out quotes. We always send out one for Super and one for LB, even though if what's being requested is just our Trendsetter Super, just because again, like Neil has a personal, myself, my own story as far as how if my family would have had something like this, it would have changed things for us as well. But diving down in the granulars on this, so critical illness. So critical illness is going to cover heart attack, stroke, cancer, end-stage renal failure, major organ transplant, ALS, Lou Gehrig's disease, blindness, paralysis. So this is where, if you have a client, let's just say you have a client that has a heart attack, she'll be able to accelerate up to 90% of her death benefit at the time of claim. So what they do is they look at the severity of the impairment or the incident that happened, and base that on how much that's affected her, how it's affected her life expectancy, and that's how they're able to accelerate and get access to their death benefit on a term product. So maximum exposure is lesser of 90% of the policy face amount. And this, you can see the amount will never be less than $500,000. And this is what they're saying, the maximum amount. So right now, that's why the maximum face amount is $2 million on this product, because the maximum amount you can accelerate or claim you can make under your living benefits is $1.5 million. So, quick case story, and like Neil had said, I'm sure once you dive into this, each of us will have their own story as to, wow, if this was available. I had an aunt, I had an uncle, I had a sibling that had a heart attack, and how that affected them as far as financially. So this is just a case scenario with Eva. Eva's 40 years old. When she takes out the Trendsetter LB, she's paying $45 a month. 8 years into the policy, she suffers a serious heart attack, and it's determined to be a severe heart attack as far as how it has affected her life expectancy. So here you can see she's paid premiums paid to age 48 is $4,272. She has a face amount of $250,000. She files a claim, and like I said, it's determined to be a severe impact on her life expectancy. So she's able to accelerate the 90%. And at that point, and there is a formula that we use, but at that point, she'd have the option, and that is one thing that's unique with us, is she can literally file a claim and then find out what that claim would be. Now at this point, she could take $134,552 would be her one-time payment on this for claim for her heart attack. Or she could say, you know what, I'm not sure I need that right now. But if you think of a client in this example, Eva, who right now maybe is the breadwinner, and now I have had a heart attack. I've got to go through months of rehabilitation. Medical bills are piling up, and now what do I do? Well, like I said, you can file a claim. This would give her peace of mind to at least be able to make a decision. Do I want to accelerate my death benefit and take that lump sum now to help me cover this, or you know what, I'll hold off. Transamerica, just hold on to that. Let me see how this plays out. Oops, sorry. So, Neil, I'm not putting you on the spot. Was there anything you wanted to add? Because I was going to go into wealth and health on this.
Yeah, I was just going to say, so this case study we're looking at right now with Eva is in our consumer brochure for Trendsetter LB. And so what a lot of agents do is they'll actually use, there's actually a couple different case studies in the consumer brochure, and they'll use this to present it to the client. Because really just seeing it, how it could work for a real actual person, a real scenario, really connects with clients and really sells the value of the living benefits on the policy.
So yeah, and that's a great point, because the other rider that's included on this is our chronic rider. So that is, chronic is very similar to long-term care. You cannot call it, and please don't call it a long-term care, but it is very similar to where if someone cannot perform 2 of the 6 ADLs, very similar based on the severity of their condition, they can accelerate up to 90% of the face amount. So our chronic rider, illness rider, and critical are both built into this product. So, and we'll dive a little bit more into how to position this. But as far as that is, these are unique, and I just think over the last couple of years, these have really come to the forefront as far as individuals wanting more out of life insurance than just a death benefit. So wealth and health. So we can, Neil and I can actually, this could be a several-hour presentation. We hired an outside service several years ago to do some research. So I'll summarize as fast and as best I can. But the bulk of what this gentleman and this firm did is they brought in individuals, just basically the general population. And the interesting thing was they had individuals like me present in front of them. Agents, we brought in agents, and agents presented in front of them. We had leadership, just a whole host of different individuals who were able to get in front of them, speak to them about life insurance, and really a lot of question and answers just regarding the general public's concerns and what they're looking for out of protection, for them and their family. And the interesting thing was, next page. So the interesting thing was, we came out with, so the one, if the words wealth and health, so I'll just let you know this, if the words wealth and health were said within 90 some seconds of each other, individuals within the room, their interest peaked, because individuals today have learned, and this is what we've learned through this research, individuals have learned that between now and retirement and into retirement, what's really going to affect that? What's going to affect them and affect their financial well-being? It's some type of major either critical or chronic health issue that they're going to have, right? I mean, you can have, Neil and I work with a lot of agents that sell just life insurance. Well, after seeing a lot of, seeing our presentations and that, we've got individuals who write health insurance now writing this product because it's complementing their health insurance coverage that they put for their clients because of the critical and chronic illness. The other thing that we learned through this study was individuals were asked, what's your number one concern between now and retirement and in retirement? And it was 70% of the individuals said having some type of major medical issue and not being able to afford it, or just having to dip into my savings before I had to. And if you think about it, life insurance has been sold for hundreds of years. Okay. And for the most part, life insurance has always been sold, and these are my words, but, Mr. and Mrs. Client, what if you step off the curb and you get hit by the proverbial bus, you pass away? Don't you want your spouse, your children, your house to be, be able to pay it off, or your kids to go to college? And what we learned from this research that we did was basically clients are more concerned about stepping off the bus, stepping off the curb, getting hit by the bus, and living. That's the real major concern. And if you think about what's happening in today, I mean, medication, medical, as far as what people are living longer, right? So the people are less concerned about dying than they are about having some type of major medical issue. I like this next page, and most of the time when we're in front of individuals, this is where everyone's taking pictures of the screen. But if you look at just some of the statistics on here, 62% of the bankruptcies in the U.S. they are attributed to medical expenses. Number one cause of bankruptcy in the U.S. is because of medical expenses. So someone has some kind of major medical issue. Health insurance that they have only covers up to a certain amount, high deductibles, things like that. Number one reason small businesses have failed, well, up until probably COVID-19, but is because one of the owners has one of the owners has some type of major medical issue that they have to wipe out their savings plans. 24% of the people that we surveyed, reasons they had to dip into their 401k, their retirement, was because of some type of hardship that was caused from medical expense or issue. So what's the other one that I like? It's 363,000. So I thought this was interesting. Projected lifetime cost of healthcare for a healthy 65-year-old couple. So between a 65-year-old couple today, between now and age, now in the next 20 years, they'll spend on average $363,000 in retirement just on some type of major medical issue, to cover themselves. So if you think of someone who has saved all their life and gotten to the point to where they can retire, and then someone comes and tells you, hey, you have $1 million for retirement, but you really got to take out almost 400,000 or 370,000, because that's on average how much you're going to spend over the next 20 years. So I like this page. I just point that out. Neil, is there anything else?
Yeah, I'll just add one other stat about, so on the chronic illness side, that's the writer we were saying was similar to long-term care, but please don't call it long-term care. So that's one where we can accelerate so much money per year if they're not able to form 2 of the 6 ADLs. So if you ever look at the cost of a nursing home, I mean, it could be upwards of $90,000 per year. And if you assume that someone's going to live about 3 years, I mean, just there, that's putting you to $270,000 just in the cost of the nursing home. So having this product, having something that can accelerate part of the death benefit to help with those costs could really change lives. Absolutely.
Sure. All right. So our underwriting enhancement or non-med enhancement. So I know through this I didn't mention, I mentioned some issue agents and that for the various products. Because of what with the pandemic right now and what we're working through, we have worked with our reinsurers as far as trying to make it easier to do business with us, number one. But with that, so we're able to enhance our non-med limits, okay, which is a good thing. But what came with that was some restrictions as far as what age groups we can issue. So I'll just tell you, like I had mentioned before, ages 76 and above, we are not issuing policies at this point. And that's the agreement that we came, like I said, with between us and our reinsurers. But during this time, so what we have is, let me see. So what we have is, for as far as our enhancements and what we were able to work with our reinsurers. So, and this is for all of our products at this point. So this is our both of our term products. We have a lifetime whole life product that we recently launched, and our IUL product. So ages through ages 55. Okay, through age 55. If you have an individual that can provide some form of a lab, okay, and there's two different ways that they can provide us a form of a lab. One could be, hey, a couple months ago they applied for life insurance with another company. If you can get us that lab slip, we'll use that. They won't have to do they won't have to do a lab with us. Or, and this is where Neil and I are seeing a lot of individuals doing business with us under our new COVID-19 enhancements, non-med enhancements, is if they recently have had, so less than a year old, if they recently went to the doctor, maybe did an annual checkup, those labs that they do, that they got their primary care physician to do for them, if they can access them, which a lot of individuals we're finding out can through their patient portal, if they can provide that to us, you can write up to $2 million, non-med, okay? And all rate classes are available. So we're not going to limit them. So if you can provide some form of lab, as long as it's no older than a year old, you can go up to $2 million face amount on all of our products, not final expense. It's obviously that's a little bit different animal. And you're going under our new non-med enhancements right now. Okay, for ages 56 to 75, you'll see, just so you know, it's business as usual, meaning we only way we can issue a policy is under the normal underwriting guidelines. So this is what I'm going to talk about is for up to age 18 to 55 as far as the non-med. So this is option one. Option one is, hey, you can provide us a lab from either your primary care physician or from maybe one that from applying with another carrier. You can write up to $2 million, and you have access to all of our rate classes. So our preferred best class is available. Second option is now you have an individual who up to age 55 who cannot provide a lab from a previous carrier, or hasn't, last time they had their annual checkup was more than a year ago. So here we'll still allow you to do a non-med with us, except now it'll be $1 million maximum coverage, which is still pretty good. But where we're going to restrict you is on the rate class. So best rate class available is going to be our standard plus. So it's one rate class above standard will be the best rate class that your client would be able to qualify for. But here's a unique thing on this with this option. So if your client if this is the path because they can't provide us a lab, you can write up to $1 million. They get the standard, they apply and they're in good health. Normally they would get a preferred best, but they're like not comfortable doing a lab. We can't get someone to go out and do a paramedic to go out there. So they get the standard plus. Once this pandemic is over, and there's no indication obviously when that's going to be, we are going to open up a window for your client to actually go back and do the paramed if they would like to better their rate class. So here we're limiting you up front on rate class and face amount, but we're going to open it up for you to come back and say, hey, Mrs. Smith, you actually were, I know you probably are a preferred elite. Are you comfortable now doing a lab right now, a paramed, because you can actually lower your premiums on your life insurance. So that's going to be available down the road when this pandemic is over. Neil, is there anything that you wanted to add as far as on the COVID-19 enhanced?
Yeah, I'll reiterate. So Dwayne mentioned this. I just want to reiterate. So the key of these non-med updates, these non-med limits, is really we're just trying to provide flexibility and different options. Not trying to put you in a box and say you have to do business a certain way. So if you want to do the full paramed blood and urine for your client and get them the best risk class available, you certainly have the option to do that. Or if we want to go with one of these non-med options, you can do that as well. So we really don't want to put you in a box. However you want to do business, that's how we want to accept the business. Absolutely.
Okay. Hey, Brian.
Yes, sir.
Yeah, at this point, if you want to open up for questions.
Absolutely. Dwayne, thanks so much for going through all of that with us. I mean, just great information. I definitely learned a lot. I actually have a few questions of my own, but we're going to start with our attendees and answer some of their questions first.
Sure.
The first question here, it says, did you say that we will not be able to write this product? And I think at the time they were speaking, you were talking about you were starting to talk about final expense, that we would not be able to write this product up to 85 during COVID.
Correct. So max issue age on all of our products is up to age 75. So 76 and above at this point, we can't write individuals 76 or older for any of our products at this point, just because of COVID-19 and the agreement that we had with our reinsurers.
And I'm just curious, Dwayne and Neil, because you mentioned a COVID questionnaire, is that something that you think might become standard?
So are you speaking to or asking in regards to the non-med, the 1 million and the 2 million and that
just
type of?
Just in general, I guess, because we have, obviously we have millions of people now that possibly, could be infected. Do you foresee anything like that, or even a question on an application coming up concerning COVID?
I have not heard of anything as far as, so I guess in terms of, specifically asking, have you ever had it or been exposed to it type of thing?
Yeah, just curious if you guys have heard anything on your end.
Right. So everything that we have heard, because we've specifically have had that asked, we've asked Neil, our position, have asked our underwriters, and at this point, the industry kind of, but I'll just speak to Transamerica. It's not like we're going and going to redo our underwriting guides or anything like that, guidelines.
Right.
It's not to that. It's not reached that point. Obviously there isn't concern, but it just hasn't reached the point to where we're going to go back and go, okay, hey, this is now something that going forward we got to throw this in our guidelines, and this is going to become we got to underwrite for it.
Right.
So that's why you're seeing the limitation right now, is because of what the CDC and everything is saying as far as that age group, that 76 and above.
Right.
That's where our reinsurers have gone and said, you know what, we can't during this right now. We just can't. We don't. That age group is so susceptible to this that we're not even going to allow you to underwrite it.
Right. Okay.
Yep.
Yeah, and it, a lot of our questions are about surrounding COVID. Obviously, we're all dealing with it right now. So the next question, it says, are the illness riders included during COVID-19?
For up to age, that's a good question. So up to age 55, And I did Neil, Neil, and I did not mention that. So, so up to age 55, your Trendsetter LB, some of our other products, our whole life product that we have, and our IUL do have the living benefits included. So up to age 55, they are. At this point, ages 56 to 75, the living benefits. So Trendsetter LB is not available for 56 to 75, and the living benefit riders are not available with our other products for 56 to 75.
Okay, that's
at
good
this point,
information.
right? So that at this point, but and I apologize, I did gloss over that. So 56 to 75, someone wants Trendsetter LB right now, they can't get it. So hey, go ahead and get them the Trendsetter Super product, because again, down the road, we're going to open it up to where they can come back and say, hey, I do want to be underwritten for the living benefit riders.
Okay. Okay.
And we don't need a new application too. If I can just chime in real quick, if that does happen to your client where they've applied for the Trendsetter LB accidentally, we do not need a new application to go ahead and do the Trendsetter Super instead. That even applies outside of COVID-19. Let's say you really like the living benefits riders that we've talked about. Let's say on a younger client, let's say you have someone in their 40s who could still get the Trendsetter LB right now, even during COVID-19. But for whatever reason, just medically, they don't apply for they're not eligible for the living benefits. What our underwriters will do, they'll ask, hey, do you want to do the Trendsetter Super instead? And you can do that, and we don't need a new application. You can just go ahead and request the other product.
Okay, that's good. And the next question, kind of in the same vein here, how will the end, in quotes, of COVID-19 be determined?
I can't. Yeah, I don't know, because it's a great question, because I mean that's the $1 million question. I don't know. I really don't. And that's every call that we've had with our senior underwriters is, all right, so are we keeping our non-meds for another month? And so they're not even putting a stop. They have not, just to answer that question without answering it. They have not, every time they've been asked, and what we've had the opportunity to have our senior underwriters, they've never even given us here's kind of the time frame we're thinking. We haven't even gotten that yet.
Yeah. So that's, and as you can see, that's something that's on a lot of agents' minds. It's on everyone's minds, I'm sure. Just
Sure.
trying to figure out how to navigate, where we're at right now. But I'm going to switch up a little bit, and this is actually my question here. So when you were talking about the through age 55, the temporary options as far as underwriting requirements, and you had talked about the 12 months. If they can provide a lab that's up to 12 months old, they can do non-med up to $2 million. But then you also touched on, if a client can't provide labs that is within that 12-month period, they can do up to $1 million non-med, but they would be capped at standard plus as far as a rating. So I just, and I'm not sure if I missed it or not. So how is that qualified? Are you saying they don't have to provide anything, or they do have to provide a lab, even if it is 12 months old?
So for the 2 million or the 1 million?
For the 1 million.
Okay, so 1 million, you're capped at $1 million under the the non-medical limits. You're capped at $1 million if they cannot provide a lab, and the lab being member from a maybe another carrier or from their primary care physician. So they're capped at $1 million, and we're going to also cap what rate class they can get. So best rate class they can get is going to be one class above standard plus. So yeah, and that's where we're saying hey, yeah, you can't provide us some of the information we need, but down the road, we're going to open up a window where they can come, and it'll be at our cost if they want to go and get a pyramid done down the road.
Mhm.
And the best they can do is better their rate class. We cannot come back and say, hey, no, you're actually a standard now, when you got a standard plus.
Right.
So we're going to open up a window. And that, I know I'm anticipating the next question will be, when will that window open up? That's where we don't know. So
Mhm.
we're just saying it will be available. We just don't know when this will end. But
Sure.
yeah.
And does
And
that
then,
does that go ahead?
well, I was going to say the other thing is, as far as the process behind this. So
Mhm.
what we have not done. So if you go, and this is, well, if you go to, let's say you're going to do an e-application on iGo or iPipeline, we didn't go and tell iPipeline, hey, reprogram all of this. So if an agent's going to do a non-med under our new COVID-19 and non-med enhancements, we didn't change any of the programming. So I'm just telling you, as far as a process standpoint, if you have a client who's 40 years old and just went and had their annual checkup and has some labs, let's just say 6 months ago. So, hey,
Mhm.
Dwayne, I got a person who she's 45 years old or whatever. It's just, 40 years old, has the labs. You go to e-application. Number one, because we're not doing a pyramid. The, the agents will have to complete a full application. So they'll be completing the part one and part two, part one or part B or whatever, however, some systems will call it part two. So you're going
Right.
to be completing that non-med part that the pyramid normally would go out. So you want to select an iPipeline full application. So that's number one. Number two, an agent notes. Hey, Transamerica underwriter, I'm sending this for Mr. and Mrs. Smith under your COVID-19 non-med
Agreement.
enhancements.
Okay.
Okay. And then what will happen, because again, just trying to set expectations, because I know what will happen then, we receive the application, there's a whole automated process that happens. So all of a sudden you go log in and they're going to see in their agent portal all these requirements, right? And it's going to be normal requirements under normal conditions. Okay. Allow us a couple days and the underwriter to match everything up, and then we'll remove those requirements as far as for the non-med, because I know we have agents calling us, Neil, right, all the time saying, hey, I'm doing this under the non-med and they're saying I need a pyramid. They're saying I need all this. It's just because we didn't change anything, so that when we do go back to normal, that's the system and how it works.
Right.
So
Yep.
just a little bit of expectations there.
Yeah. So and in my agent mind, the reason that I ask that is because I mean I know that there are caps to your non-med as far as the super and the LB. So someone could actually use this as an opportunity, unless I'm looking at it incorrectly, to if a client is looking for 500,000 instead of just 249,999, this is something that they could utilize, or correct me if I'm wrong.
Sure, absolutely. Yeah, that's what this is designed for. Is as far as the non-meds. Yep.
Right.
So
So that's
that,
awesome.
yeah, that too. Yep. On the Trend Center LB, that was the non-med. What used to be 249,999, right?
Right.
Now you got the million and 2 million. So yeah, so you could see that we were a little behind as far as our non-med limits at 249 on that product. So I think before you had asked how you may see at some point when we're no longer, I guess no longer in the pandemic, you may see our limits maybe staying close to this as non-meds going
Wow.
forward.
Wow. That's awesome.
So this is, I mean, as far as from my perspective and with Transamerica, it's really forced us. It's forced our entire industry to really rethink how we do business. Um, you know, the insurance industry, a lot of it is antiquated, our systems and that. So it's forced us all to really adjust how we do business and that. And I think from my perspective here with Transamerica, you're going to see probably some of those enhancements stick around.
Right. Awesome.
Yep.
Awesome. And just a couple more quick questions. The first one
Sure,
is,
sure.
can the products be sold remotely?
Can the products be
Like,
sold? So we have,
it's telesales.
so, um,
I can
so,
take
so
this one,
meaning
Dwayne,
that,
if you want.
yeah, I guess I just want to clarify. Sorry, are we saying that, so someone's in North Carolina and they're selling to someone in South Carolina?
Yeah. So in the time of COVID, people are still a little wary as far as going into, people's homes,
Yeah.
or vice versa.
Yeah, sure, sure, sure. Yeah.
Is
So,
is this or any of the products that you discussed today? I think this was the question is getting at. Are they
yeah,
able to sell them over the phone through the e-app, using the e-app?
right. Go, Neil, if you want, you can go ahead and answer.
Yeah, I do want to just make one more clarifying point that we're talking. So you're on the phone with the client and you've got the e-app pulled up and you're talking to your client and you as the agent are filling it out. Yes, we can definitely do that for any of our products. You can do it that way over the phone. Um,
Okay.
and for final expense, I'll just add one more note on that. Um, so we actually updated our guidelines before COVID-19 so that you could do that conversation over the phone with your client and you'll be filling out the e-app on your computer. Um, we didn't really advertise it a whole lot just because we still prefer people meeting face to face with their clients when they can.
Right.
Um, but my point being is because I know we made that update before COVID-19. When this pandemic does end, I know that it's still going to be true for final expense and any of our products. You could have that conversation over the phone. Yeah.
Awesome. Awesome. And last question here, and this is pretty simple. How do we get the rates?
So rates as far as
Like
our
it,
term, well, our term products should show up on your quote engines, right? And you can always
mhm.
go to the agent portal with Transamerica. What I will have, Neil will be sending you some follow-up information. So Neil will send the consumer guide for Trendsetter LB because we referenced that in our presentation. That's where there's a couple other examples of how the living benefits work. And Neil, you also can send them the quick quote tool for final expense and for term. Why don't we send them those links as well? So we'll
Awesome.
provide you a link. We'll provide you a
Okay.
link. One link is just for final expense, Brian, that they can click on. It'll
Okay.
open up into a browser and
Okay.
they can run a quote within 30 seconds on
Good.
final expense. And then we'll send you one that's just for Trendsetter Super and Trendsetter LB as well. Separate link, click in, boom, and it's a quick down and dirty way to run quotes.
Awesome. All right. Thank you so much. So Dwayne and Neil, before we do close out, is there anything in closing that you want to say to those attending?
I just, again, Brian, I personally, I just want to say thank you. I know you reached out to us, so I appreciate you reaching out and you organizing all of this. So thank you to you, and then to everyone on the call. Thank you for your time. And however we can help, please let us know.
Awesome. All right. So everyone, thanks again, once again to Dwayne and Neil. Guys, thank you so much for all the information that you went over with us. Sometimes we think that we know a product until we sit and we listen to a presentation like you just gave us. Lots of great information. I want to thank everyone for taking time out of your day. Hopefully you learned something new that's going to help you grow your brand and your business. If you are not contracted with Transamerica, if you are with Messer Financial Group, you can definitely go into our online contracting portal and request an appointment with them. And our contracting department will make sure that it gets over to Transamerica. If you're not contracted with Messer and you have some questions about partnering with Messer Financial Group, definitely give us a call. Contact our marketing department at 866-568-9649, extension 7819, or you can email them at mfgmarketing at messerfinancial.com. And anyone will be more than happy to answer any questions that you do have. Also take a moment to check out our events calendar at messerfinancial.com. We'll be having webinar workshops scheduled throughout the year with valuable information just like Dwayne and Neil just shared with us. And once again, I want to thank you all so much for joining us. And please take care of yourselves and everyone around you. Have a great day.